so what we're doing currently is a recap of all the learnings from day 1 to day 3 as we conclude the training sessions today.
I actually appreciate this program. It has given us a kind of light, throw more light on our audit work, audit assignment, especially this banking and insurance audit. On this issue of this, just a minute.
While we wait for Mr. Jolabu to get back, Eniola, you wanted to say something?
Hello, thank you very much, Temitope. Good morning, everyone. This is just to give like a brief recap of the session we had on day 2. Session on day 2 typically talked about the key industry regulators and the financial reporting implications. This is where we talked about the West African Economic and Monetary Union, one of the key regulators for 8 member states of Anglophone countries in West African region. Then we also talked about the Bourse Regional de Valeurs Mobiliaires, which is also a key regulator that functions like the Security and Exchange Commission. We talked about the West African Monetary Zone, the member states, and the other regulators for most of the West African countries. We talked about the fact that they each have their own central bank and they each have their own Security and Exchange Commission. Then we moved on to talking about the Basel regulations. We gave an overview on why and what brought about the creation of Basel, the Basel Accord, why it is being named Basel, the initial problems identified where they noted that national regulators were the most important actors. The coverage, there was no standard, no global regulation and there was a rise in globalization, especially regarding banking and financial markets. So they required a solution. Hence, how the Basel Accord came about. We also discussed about Basel 1, 2, 3, and 4. The main key things in terms of Basel 1. But Basel 1 came about with the minimum capital requirement, which is 8%. Then Basel 2, which is known as the new capital framework, came about with the 3 pillars. The main pillars talked about the minimum capital requirement, the supervisory review, and effective use of disclosures. Then we're about to talk about Basel 3, that talked about regulatory capital, increasing, having capital conservation buffer, countercyclical buffer, higher common equity tier 1, and minimum total capital ratio. Then we move to talk about, under the Basel 3, the new areas that Basel 3 covered, the liquidity requirements and the leverage ratio. The liquidity requirement in terms of the liquid coverage ratio and the net stable funding ratio. Then we talked about Basel 4, which was like finalized reform, which talked about the change in calculation of the risk-weighted assets. Like I mentioned, in calculating your capital adequacy ratio, it is your capital employed divided by your risk-weighted assets. Your risk-weighted asset that is in consideration is your credit risks, market risks, and operational risk. Then we move to key accounting provisions and requirements, where we talked about the relevant standards, the different relevant standards, IAS 39, IAS 2, IAS 39 is financial instrument recognition and measurement, IAS 32 is financial instrument presentation, IFRS 4 is insurance contracts, IFRS 7, which talks about financial instrument disclosure, and one of the key recent International Financial Reporting Standard, which talks about financial instruments, IFRS 13, which talks about fair value measurement, and IFRS 17, which is on insurance contracts. So then we talked about how to interpret financial statements, the key users of the financial statement, the internal users, the external users. Then we talked about the components of a financial statement, where we talked about the income statement, which is known as the statement of profit or loss, and other comprehensive income. Then we talked about the balance sheet, which is known as the statement of financial position. Then we talked about the cash flow statement, which basically talks about how cash has been utilized. So then we now talk about revenue and cost recognition, where we talk about the accrual concept, matching concepts, matching revenue of a period to a particular period, and ensuring that you accrue, even though the expenses or revenue has either not been paid or received, you should accrue for it when you are doing your revenue and cost recognition. There we had questions where we were asking questions, we responded to some questions. So overall, for the day 2, where we talked about in terms of accounting, that was what we discussed. Thank you.
Okay, thank you very much.
If there are any questions, we can take it.
Thank you very much. Okay, so I think we are out of time. So Mr. Fasia.
Yeah, thank you very much, Mr. James.
Yes.
Yeah, thank you very much for the wonderful recap. You guys have captured almost everything that has been discussed in the last 3 days, and I believe our participants are taking note. So without wasting much time, we are moving into the next item of the agenda, which is which is developing effective working papers for a result-oriented audit exercise. And Mr. Temitope will take us through for, I think, 30 minutes. Mr. Temitope, are you ready?
Yes, please. I'm going to put up.
Yeah,
put up this slide
yeah,
right
the
away.
floor is yours.
All right, thank
Thank
you.
you.
Now, once again, good morning, everyone. Today, what we're looking at generally is the review and reporting, completion of our reviews and reporting. And to start with, we're going to discuss how to develop effective working papers. We'll talk about the use of technology. We're also going to talk about quality assurance. We're also going to talk about quality assurance for result-oriented reports, how we obtain audit trails and support. And then we will conclude with identifying and capturing field intelligence, fieldwork intelligence. I should mention that Mr. James Kekure will talk about the quality assurance review for result-oriented reports and of course obtaining audit trails and supports. And then we'll close with a case study and then questions and comments. So I must say that it's been a good class since we started, and we expect that everybody will follow with rapt attention today to get the very best from these trainings. And please, if you have questions at any points, feel free to use the raise hand buttons so that you can have the opportunity to ask your question, and you can as well type in your questions using the chat box. So just like the last part of the recap that we did, talking about all of the regulations, I thought it was important for us to align that with the objective, the overall objective of this training, which is talking about ability to audit the companies, taxpayers within the financial services industry space effectively. And one of the things we mentioned as we talk about all of the regulators is that we should be able to synergize and getting information from those other regulators, which will then help us to do a proper and detailed comprehensive audit. And in doing that as well, we had mentioned that we need to align with the laws of our jurisdiction to see if there is that possibility to access information, for instance, from the central bank of our country, to be able to use such information, or even the Security and Exchange Commission. So we'll go straight to working papers, audit working papers. So what are audit working papers to start with? Number one is a detailed record of the tax audit procedure that you want to perform, the relevant evidence obtained, and the conclusions that you've drawn as a tax auditor from the audit. So as we perform all of the procedures, we're looking at, just like we said, the profit or loss statement, the financial statements altogether and all of its components, the cash flow statements, the balance sheet. You look at the trial balance of a company, the general ledgers, the revenue ledger, the various expense head ledgers. As you do all of that and you do your analytical reviews of those reports, you want to also document the procedures that you followed, and of course, the relevant evidence. And we talked about a bit of gathering audit evidence yesterday to say, what exactly do you need to substantiate this? We had a case study on that, I remember. We talked about VAT liabilities, for instance, and say, what are the documents that we need? When we talked about the issue of turnover and whether we have adequately captured all of the items, right, that need to be captured before we even apply the VAT thereon to arrive at our VAT liability. We mentioned that was important. Documents that we'll need might even relate to maybe some contracts with customers, or in the case of a bank, for instance, you might need the loan agreements with the customers, right? Relevant evidence should be obtained, and we need to document it. That's part of what we have in our work paper. So this is what a working paper is. And of course, the conclusions that we draw after all of those. We've gone through our procedures, we've gotten the evidences required, and then we are drawing up conclusions and we are documenting the conclusions. The conclusions are not just sitting in our head, but we have them properly documented. Tax audit working papers show that the tax auditor's evaluation of information, it shows how you evaluated those information that you obtained at the field, how you analyzed all of those information during the tax audit process. And of course, it documents the working papers, just like we've said, and you're able to identify if there are gaps between the documents that were required, between what the records of the taxpayer is and the audited financial statement. Because for all intent and purpose, a taxpayer would want to tell you that the financial statements have been duly audited by an external auditor, and they would want you to place some level of reliance on that. That notwithstanding, we'll do some work back from that financial statements into other documents such as trial balance, general ledgers, the fixed asset schedule, all of the documents that are required, source documents. Sometimes you even need third-party invoices, contract with customers to see how exactly revenue is accounted for. Right. And when we do all of that work back, we are also providing the documents. For instance, if you say that there is undisclosed income, what led to that sort of conclusion or that sort of statement in the audit report, that should be contained in a clear manner in the working paper. And your working papers are essential documents that would assist the audit team to plan and prepare for the tax audit exercise. So even before the audit, you should have this. And then after the audit, you're filling in the gaps, you're completing some parts of the document. So what's the importance? I think it's very good to understand the importance of the working papers. If you would begin to use them, if you have not been using them, or if you have not been placing as much relevance on them, we need to understand that number one, they are admissible evidence before a court of law where the liabilities arising from that tax audit exercise are being contested. Number two is that they increase the efficiency and effectiveness of the audit exercise. They also contain detailed facts that justify how you collected evidence, how you arrived at the conclusions as a tax auditor. They're like a repertoire of details that are very useful for future tax audits, as well as tax third-party reviews. It's possible that the audits may be referred to another party to do a review of what exactly you have done. And if you don't have a proper work paper, it could put your competence, the quality of staff that worked, of the quality of staff that worked on the audit to question. And they are also like a connecting link between the examination of a taxpayer's affairs and the audit report. So this is very, very, very important that if you're getting your work papers, you understand why you're getting them as well. As you look at the affairs of a company and the audit report, the only connecting link that you see are the working papers, the things that document all of the evidence that the taxpayer was able to provide you with, the analysis that you did in arriving at your conclusions, and of course the procedures that you took in arriving at those conclusions. Those are very important details that you must put in place. So the features of an effective working paper. Number one, we'll talk about adequacy. A working paper must contain information that is sufficient to enable an experienced tax auditor that has no previous connection with that audit to fully understand the relevant facts relating to the tax audit. So after looking at your working papers, you must ask yourself, if I get another party, whether a senior colleague or a counterpart on the job, to look at all of these things that we've done, would they be able to understand how I arrived at all of the things that have happened, right? Would that be able to take care of that? Or I would still have issues and they will still have to call me to come and explain how I arrived at some of the conclusions that I have. So is it adequate? That's the test of adequacy. Then we need the test of relevance. When you're looking at your effective working papers, it must contain only significant information. As much as we talk about adequacy, it doesn't mean that we'll bring in all information, both the relevant ones and those that may not necessarily be relevant. You're only bringing in significant information that serves a useful purpose to support the tax audit report. It's not all information that you encounter as a tax auditor on field that you put in, that you put together in the audit report, because it would then mean that you don't know how to separate issues. Some issues are just by the way, they are not consequential to arriving at the final, arriving at the final conclusions. Then the feature structure, there must be a proper structure. When we talk about structure, we're talking about having an index, cross-reference. You must also sign, date, and file all of the documents. You know, your working paper should include a heading identifying who is this taxpayer about. And I can tell you for a fact that in certain instances, we have gotten reports from the tax authority that you see the content of the letter is directed at a different taxpayer and then you're writing the name of a different taxpayer to get the report. So these are issues that can be avoided, and we need to, as much as we understand that usually what is utilized are templates, but you need to be careful that even though you're utilizing templates, you also put the right identification of taxpayer that we're dealing with, the names of the persons who prepared the working papers, those who reviewed it, and the results of the audits. All of these are very, very, very important. So we can't overemphasize the importance of the adequacy, the relevance, and the structure of working papers when we talk about the features of effective working papers. Remember, what we're talking about are not just working papers, but they must be effective. Are they doing the work? And what are the factors that will guide us in determining what the contents of an effective working paper should be like? Number one thing that I have here is to look at the entity size, right? And complexity. So in looking at the form, the content of working papers, we'll look at the size of the entity of the taxpayer that we are looking at, and what's the complexity of the work that has been done. Because you don't want to say, oh, because I have a 14-page audit report for a client, I must have it, or sorry, for a taxpayer, I must have it for other taxpayers. The question is, what is the specific situation of this company? What is even the size of the company, and how complex are their financial records? And then two, you look at the nature and type of audit being performed. Like we've said, in certain jurisdictions, investigations can almost be equivalent to a tax audit. So the expectation really is that if you're conducting an investigation, you might have more questions to ask than in a regular audit, a routine audit. And so that would also impact the content of your working papers, the sort of inquiries that will be included in the working papers, the procedures that we have gone through, even though the procedures for an audit and an investigation will be very, very similar. Then some of the things you must also include in your working papers, an effective one for that matter, is the risk of material misstatements that you must have identified during the review. Are we able to, just identify the risk of material misstatements? Then what's the significance of the documents and the evidence that were obtained on field? Then the length of period under review. Are we looking at a year? Are we looking at 2 years? Are we looking at 6 years? What are the processes and methodologies that you adopted in trying to, and that's about the procedure. We talked about this earlier, but that must be properly detailed in your working paper. And so some of the things that you would find in the working paper as audit evidence will be the audit report, auditor's reports containing review of the taxpayers' financial statements and or trial balances. I would say and trial balances, because ordinarily the expectation would be that the taxpayer has both the financial statements and the trial balance. And of course, the analysis of taxpayer revenue and expenses. Then your audit adjustment schedules. Because ordinarily, before you arrive at your audited financial statement, it's possible that the auditors decided to pass some adjustment. There could even be some internal adjustment that were passed by the company. Do we have the adjustment schedules so that we understand what has changed between the management report and the financial statements that has been audited by the auditors? Then the detailed audit plan should also be contained in the working papers. Then the risk assessment documents and audit reports gotten from the taxpayer What about the key contract agreements and some correspondence that we'll consider very significant between the taxpayer and the tax authority? There could be some initial discussions with an initial correspondence with the taxpayer regarding maybe outstanding liabilities or maybe certain issues that had been raised, maybe during a tax query, right? Such documents should be reviewed to guide the audit, and if such documents were used in arriving at certain conclusions, you must include them in the working papers as well as your tax audit checklist and notes. These are also things that you must include in your working paper documentation. Then the documents containing the taxpayer's corporate information. Then what are the memorandum that details the tax matters of the companies, the ones that you've identified, the ones that we addressed, maybe some issues were even addressed on field. Then working papers, the question would be, how do we keep them? Does it mean that there must be some very huge files that we keep together? Things are changing and we all understand that. So it then means that you don't really need to have working papers in the art form anymore. It's possible, everything is written, but writing means that we could also write them in an electronic format. It could also even be pictures, film form. It could be electronic or software forms that you say, oh, send me the documents, send me the Excel sheet, send me the financial statements. And then because we have an electronic form, what we want to also confirm is that we check the trail and we agree and convince ourselves that those documents are the original documents and they have not been mutilated. It could be even in a disk form, whether in a flash drive or in a flash drive, in a disk, in a compact disk, or it could even be stored in the cloud. If it's stored in the cloud, however, you want to be sure that such things cannot also be tampered with by the taxpayer over time. It's not something they can fiddle with and then you see something today and tomorrow it has changed to something else and information is showing you that maybe $10,000 was paid for certain items and you can see the invoice there today and tomorrow things change and you're not seeing that same information again. It has been updated because that's one thing that can happen. You must be sure that you can at least check what has changed with that document if it's been provided to you in the cloud form. And of course, when you get those, you might also want to, what this means is that if you've obtained audit evidence in soft format, say as part of cloud storage, disk format, we might also want to keep our working papers in the same format. And there is a way we can link everything together to put everything together in the cloud as well. So if it's electronic form, one of the things that we must do is ensure that it's consistently backed up so that we don't lose such information. Because if you keep it in a particular device, don't forget something could happen to it. So you want to actually utilize more than one storage means if you're using simply e-formats. You want to keep on maybe a flash drive or a storage disk, or you also have them in the cloud such that you can always refer to them. So when you want to then review your working paper, we look at three things, three categories of review. The independent quality review. This is looking at another member of the team. For instance, another member of, a tax official who is not necessarily within that team, right, could be appointed to do a review. Or you could have a specialist, someone who is completely not even within the system, come and review it, but has a proper understanding of the issues, has a proper understanding of the audit issues, or a lead review. That would be a member of the team, but a leader of the team looking at the working paper and seeing what's based on the approach to work, the objectives, what has happened, and how have things been carried out. So let's talk about these three types of review in greater detail. Number one is the independent quality review, and it's carried out by an independent person or team to check the quality of the working papers. It looks at the situation where similar conclusions have been reached by the audit teams and expressed in the working papers. Also, as we look at this, you know that an independent quality review cannot be carried out by any member of the primary audit team. So it's not within the team, it's someone outside of that primary audit team. It could be another audit team not responsible for that same taxpayer. It is conducted by a senior expert or a team of experts, depending on how complex the audit is. And of course, the secondary team that is looking at this independent team tests the sufficiency of the skills and expertise of the primary team and their performance of general tax audit procedures. Yeah. So one of the things that you also want to pay attention to when you're looking at an independent quality review is that there should be issue memoranda. That's a summary, a notes covering the issues that were noted as a result of the audits, how the issues were addressed, and how the working paper, the entire working paper, as a matter of fact, may not be subject to independent quality review. It could just be the notes, the memorandum that the independent team is looking at. They would want to pay attention to that, because the idea of an independent quality review team is not to redo the work of the primary team. What they want to check would be the conclusions and check at random what led to those conclusions, the documents that may have been picked up by the primary team. So we'll talk about the specialist review of working papers. With this, you know that the nature of taxpayers' business could give rise to specialist review. For instance, I noticed that someone had asked us a question about auditing oil and gas companies, and maybe in a situation where you do not already have experts within that field, it might be necessary to say, oh, let's get some experts, some specialists to come look at this for us, given the importance of this to our process and given that we've not done so much within this line. And so when we also look at property valuations, for instance, things that are maybe treasury-related fundings, some technical matters, you might need a specialist to look into it and consult with specialists so that you are not taking, you're not coming to conclusions based on assumptions that are not validated. The completeness and accuracy of the data that the specialists would also use, the methods used, the assumptions, the conclusions reached, should be in comparison with prior periods. And of course, the significance of the specialist's findings are all very important factors that the audit team should consider when they are relying on the specialist findings. So you don't say, oh, because we've gotten a specialist, then we discard our own understanding of what we should do. Yes, you must, you can rely on it, but you need to check what are the assumptions. For instance, if you say a specialist should come and help verify the property valuation that were utilized in arriving at some assessments on some property that may have been disposed by say an asset manager, for instance, or income that have been realized from such. You're not going to say, oh, I'll take the specialist work, hook, line, and sinker. What are the assumptions? What are the benchmarking analysis that were carried out by the property valuer? And then how did they reach the conclusions? And is this consistent with things that have been done in prior periods? These are some of the things we must consider as we also check the work of that specialist when we talk about specialist review. And then the extent of reliance that we can place on the specialist findings would be determined by how much involvement the specialist has in the work, and of course, the level of expertise of the specialist. Let's come to lead review of working papers, which is performed, like I mentioned earlier, by the lead of the audit team. He does a comprehensive review of the audit plan, and this should really be the first review before we even start talking about the independent review. Or sometimes it could be that you even need a specialist review along the line, not necessarily at the end of the review by the lead review, right? So the completed analysis of the financial statements, the requisite schedules, the letters, the minutes of meetings, the correspondence, the specialist reports, the evidence that have been utilized, the audit issue memoranda, as we talked about earlier, the related party transactions are some of the things that the audit team lead would want to pay attention to. And the whole idea of this is, number one, to ensure compliance with the audit strategy, because a strategy for the audit must have been agreed ab initio. Then we must evaluate the quality of the work done. Then look at the issues that require further clarifications, maybe by specialists. Then, of course, the lead review must also pay attention to proper referencing, where the work's properly referenced, especially because this might be going to an independent quality review team. And you don't want that team to start raising issues of what a lead review as a lead has done with respect to the review of the audit's working papers. Then assess the checklist to ensure that necessary actions are completed. Then check the compliance with legal or regulatory requirements. Ensure that there is a consensus with the conclusions reached by the audit team. The lead review is necessary for verification of evidence that you rely upon in drawing audit conclusions. And it brings fresh perspectives to the development of the working papers. It also reassesses the premise upon which you draw your audit conclusions, and you're able to validate the audit findings with the lead review doing a proper job. So that's about it for the working papers, reviewing the working papers. I think I'm just 1 minute behind time on that. So we'll move straight to use of technology in data analysis and presentation, and I'll take questions together for the two modules immediately after this part. So, use of technology in data analysis and presentation. I think we cannot overemphasize the fact that taxpayer information is growing vast. You would agree with me that the same customers, businesses want to grow, and the same number of customers they had in 2019 shouldn't be the same number of customers they would have in 2020 if things are really growing with the company. And as they increase the number of customers, expenses will also grow, and so much information continue to come into the purview of a taxpayer. And so you also see situations where we're now talking about data protection, because data is increasingly getting sophisticated, right? And so taxpayer information is not only growing very vast, it's also becoming smarter. And smarter meaning that is coming in a format that people want to be able to take informed decisions. And as such, when we also look at audits, it's becoming necessary that we begin to adopt technology more than ever in auditing data, right? If you're going to guarantee quality, if you're going to do a focused and effective audit, And so if you look at utilizing technology, using the software tools that are necessary, some of the things, some of the advantages that we see with that are some of the things we've listed here. Number one is risk management. When you deploy technology, you are able to manage risk. What is that risk? The risk of boredom. You have stacks of documents to review, and then you are saying, where do I start from? But if you say, oh, can you provide to me this general ledger in a soft format, in an Excel sheet, right? Or in Excel workbook, you're able to play around with that information more if you understand the right analysis to be done and how to use those tools. Number two is that it saves time. You don't have, aside from managing the risk of boredom, where you've looked at pages one, two, three, and then you're saying, oh, I still have 200 pages of this document to review, right? And then you are missing things up by the time you are getting into the the very end of the issues. But with technology, you're able to synchronize everything and review everything in a shorter time also. So you reduce the time you spend on data extraction, and it allows for more productivity when you look at it in all. And then that leads to quality. The audit quality is increased, is eases the sophistication of works, and of course, you're able to draw insights in a better manner. And of course, technology also aids fraud detection because you're able to interrogate the data. You're able to use tools like artificial intelligence to even determine, is there consistency in the way this report is generated? If there is no consistency, are there things flagging possibility of fraud? And then you're able to do some control testing. And with all of that, it helps to check whether there is fraud in the process for the taxpayer. So features of technology that you use in data analysis and presentation. Number one, risk assessment and report generating features. If you must use any tool at all, is it able to help you access the risk and generate the reports, right? There are several softwares that may be utilized, but if it's not going to do this, then it's not good enough. Number two is that, does it help you with audit planning and issue management? Remember, we talked about team and case management yesterday. Are you able to synchronize those thoughts and those steps into this technology that you intend to deploy for your audit process? Does it help with data capture, and does it have analytical capabilities? For instance, if you say, oh, I can use my computer, and because I can use my computer, I will use Word Microsoft Word application to prepare my report. With Word, you are limited. How much can Microsoft Word do for you? There is no analytical capability. All that it helps you to do is just to write. Even when you create tables, you can't play around with the tables as much as if you are using an Excel tool or a tool similar to Excel, right? Does it have learning enhancement features? Is it something that can give you some help if there are issues? Then automated alert system, productivity boosters, can it boost productivity for you? Does it have document management features? Is it something that you can attach a document to and you say, oh, okay, this helps to at least track the audit evidence for point 1, 2, 3. For instance, you would find that if you know how to use your tools very well, you could even attach a document into your Word document or into an Excel document, for instance. It depends on how well you're able to use it, and then how flexible is it? And that ties into that as well. Does it have a user-friendly interface? Is it something you're going to have to struggle with? So how do we manage the challenges that are associated with technology, the use of technology and the audit process altogether. Number one thing here is data privacy and confidentiality. Now, we've talked about data protection and all of that, and taxpayers can be very, very particular about this. And we all understand how important data privacy has become, given the global data protection regulations that have been passed and it's been adopted by various countries. So taxpayer information is at risk, significant risk of exposure if there is a possibility of hacking or there are data breaches. So to prevent confidentiality issues, you must take necessary data protection measures and upgrade your system such that it's not easily hacked. Again, what emails are you using for official work? Are you using one that is prone to ease of data breach? You might be binding your tax authority, your management to a big issue if you allow information to spill out, because taxpayers also have the rights to sue. And if they're suing a tax authority, it even defeats the whole purpose of the tax audit exercise in itself in the first place, because you're going to have to deal with that issue separately, and you may have to even conclude that issue before you go on to the next. You don't want to come to an audit to a taxpayer's premise and you have gotten information and the information flies around to family members and then they are discussing the issues of one of your taxpayers in such a manner that it goes out and it becomes an issue. Then, so the technology that you're using, how protected is it? Maybe for correspondence, how protected, how encrypted is a system, right? Then the technical issues. There are several softwares, like we said, but some are more prone to some technical glitch or glitches or difficulties, and it may cripple the entire team. If the team is not able to use that tool properly, then it becomes a problem. And so where possible, what you must do is that you must have a backup software that you can deploy so that there won't be lack of productivity because of technical downtime. Then we talk about another challenge that you may face with the use of technology. It has to do with competence. The audit team may not be competent enough to use certain audit software. And so this will lead to inefficiency and it could drop quality of work. So what can we do to deal with that? Periodic training on how to effectively manage this challenge and how to use the tools in particular. What about cost implications that we must deal with? Because softwares are not altogether free, they are not cheap. If you're using the cheap version, if you're using the free version, then it could be that you are trading the data of your taxpayer for some other reasons, and then it could lead to issues that we've already mentioned. You're breaching confidentiality, and then it could lead to courts injunctions. The use of technology in audit process, using software, it should be considered as an investment that will yield great returns because it's going to reduce the time that we spend on the audit, like we've mentioned. So as we talk about the cost, don't think that, oh, because it's so expensive, we cannot afford it at all. If you are in position to decide what kind of software, you must look at what's the return as well. If we deploy this, what's the potential returns? What's the return on investments for the software?
I was trying to come.
Hello, Jay.
Yeah, hello.
Yeah, it seems we have lost Temitope.
Yeah, but
Can you step in first before we get him
I
back?
think he's almost done.
Yeah, just
Okay, so
yeah.
okay, so what our presenter was discussing was the various issues that might arise from the use of information technology in a tax audit. And we're talking about data privacy, and confidentiality. And in most tax jurisdictions, you will have a provision in the tax law that the tax authority has responsibility to maintain the confidentiality of the taxpayers' information. So with the use of information technology, because you are using electronic means, there's a high vulnerability in exposing confidential information of the taxpayer. And then here, how do we deal with that? Is to put in more protection measures, both in terms of policies and as well as procedure. And one of the procedures could be, for example, restricting access of the users to that information, because once you restrict access, then you can know exactly if that information is leaked or is exposed. You know exactly those responsible for maybe investigation. But it's very important that, like our presenter said, if you happen to expose the taxpayer information, you could be sued, and that could also jeopardize the authority repetition, because other taxpayers may not be even willing to cooperate with you in providing you their sensitive information. He also talks about critical issues with respect to the difficulties in the utilization of the software in terms of glitches. Glitches are resulting from other viruses or maybe certain features that have not been updated to make the software functional. So that has to be dealt with through update and backup of the software so that you can have the software functional as much time as possible. Then he talks about the competence of the auditor in the use of the software. And that is very important because the tax administration has invested huge funds in the acquisition of the software. It is important that the auditors are trained to use the software to effectively conduct an audit so as to maximize the benefit that we earlier talked about, saving time, risk management, the quality of the audit, and also through fraud detection. So an effective use of the software is the important investment return, because if the software has been acquired and the auditors are not able to use the software, that would be a waste. And in fact, it could also lead to a drop in the quality of the audit, because certain features or certain understanding of the software has not been acquired by the auditors. And then that would pose a serious challenge on the work of the auditor with respect to performing the audit. Then the cost implication comes about for the acquisition and subsequent maintenance of the software. Okay, so of course, these software are usually very expensive, especially when they are custom made to a particular tax jurisdiction or tax authority. And basically, there are two versions of software. You can buy software off the shelf, where it has already been generally customized. There's a generic feature, which mostly a little cheaper than a bespoke software where they customize to a particular tax administration and user tab and stuff. And because of the customization, where you have, for example, risk assessment feature, where you have reporting feature, and you also have maybe data management in terms of uploading data and all that kind of stuff. So any additional feature you're going to add to this software is going to cost you money, and you be very sure that those those use are made very effectively. So how do we deal with that? Is mostly to consider which feature serve the intent of the tax authority. So not just every feature you will want the relevant features that will help the tax authority in conducting an effective audit so as to have a quality audit. You can save time and you can also detect fraud, because once you are dealing with a huge volume of data, the use of software will enable you to access up to 100% of that data, because the software has the capability of data interrogation to up to a million or more entries, so that short investment will be very, very important. So I think it's a very beautiful presentation. It's also a recommendation, especially where there are benefits to be achieved. The tax authorities in West Africa, there will be a very good investment in acquiring and using automated audit software so as to support an effective performance of tax audits, and then the yield on the audit can be very, very maximized. So can I control? Back now.
Yes, I think so, Mr. James. Thank you very much for stepping in. Mr. Temitokwe, are you okay?
Yes, thank you very much.
Okay, please, can you help us to wrap up in the next 3 minutes so that we don't overshoot our time?
Okay, that's actually the last slide for this module.
Yeah.
So I think it would be good to entertain questions if some of our participants have questions.
So let me just, Mr. Temitokwe.
Okay, I'm with you.
All right, so let me just kind of provide additional maybe experience from my end regarding review and how it works in most tax jurisdictions, especially in East Africa, because I've had the opportunity to travel to some of the tax authorities in Mauritius, in Rwanda, in Kenya, in Uganda, and done an extensive study tour of these tax authorities. So what we see happening in most tax jurisdictions is to have a separate in-house quality review department that will support the audit department in providing on-time, real-time quality assurance from the planning of the audit to the issuing of the audit bills to taxpayer. So this in-house quality assurance department has staff with advanced knowledge in accounting and reporting, as well as the tax legislation, because the team as a whole should have the expertise and skill to conduct the audit, but there may be some additional knowledge required, especially when you're talking about critical industry like banking, finance, or insurance. So in East Africa, what we've done is to create an internal department responsible for providing quality assurance from the initiation of the audit to the completion. And that will also help in ensuring that whatever result in terms of audit report, conclusion, or determination will be very accurate and will also lead to the tax authority maximizing the revenue, collecting the full revenue. So I also want to maybe suggest for tax administrations in West Africa to kind of consider such approach if that is not the case at the point, because such creation of internal unit will actually help in the audit investment, because most of the tax compliance, the major tool for tax compliance, especially in West Africa, is through audit. And we should make sure that audits are conducted effectively to collect the lawful revenue. So I think that was just just my opinion on review. So can you please take over? There are a lot of chat here. Okay. So Mr. Temitope.
Yeah, I'm with you.
Okay, so thank you very much. You can take over, then maybe you can respond to questions, and if somebody wants to make a comment, that would be good.
Thank you very much for helping out. Anyone with a question or comment? I hope attendees are following.
Yeah, I think they did. So.
Well, it appears that we don't have any response from the participants, but so far so good. I must thank you once again for the beautiful and wonderful job you have put in this morning. So in the absence of any question from the participants, we would like to proceed on a 25 minutes break to come back, after 25 minutes for the remaining segment of the training. But before we do that, there's an important announcement that I would like to make in response of the evaluation form that we imploring our participants to submit. We have been receiving quite a number, but with the number of participants we have, there are some that are yet to submit. Please kindly remember that if you don't submit your evaluation form, we may likely not be able to, to post you your certificate. So this will allow us to have access to your email and also be able to communicate with you on your certificate. So thank you very much. Hope to see you in, after 25 minutes. That is by 11:46, hopefully. Thank you and enjoy yourself.
Thank you very much.
Good morning, our esteemed participants and our facilitators. I welcome you back from our 25-minute break. Now we are going to proceed with the last segment of our training. And Mr. James Kekula is going to take us through for the next 45 minutes or so. But before then, I would like to take a pause to make a very important announcement still on the evaluation responses from our participants. We have reposted the link that will give you access to the form. Kindly remember that the name that you want it to appear in your certification, you put it in the evaluation form and your email that will forward it. So without these two information, we will not be able to generate your certificate and send to you. So please take it as a very serious engagement and kindly do so between now and tomorrow between now or tomorrow after this program. So Mr. James, you can please proceed.
Okay, thank you very much. Good morning. Yeah. Hello, everyone. Welcome to this session on completion review and reporting, obtaining audit trails and support. Let me say a big thank you to Mr. Temitope for that excellent presentation on working paper, the content of the working paper, first the nature and the importance of working paper, its content, as well as the respective reviews of working papers so as to provide quality assurance that the audit was planned and performed in accordance with relevant standards or laws and regulations of the respective jurisdiction, and also the use of information technology to conduct effective audit so as to save time, properly manage risk, also ensure the quality of the audit output. And because of the automation of it and the advancement in automation, you can also detect fraud because of the volume of information that you are able to interrogate. So I'll not be going through all those things because it's just a continuation. Completion review is essentially a part of the audit, in as much as it is important to plan an audit and document an audit. It is important to complete the audit and report on the auditor's finding based on the accumulation of audit evidence. So this session is going to be about how to complete the audit and what audit supports, what supports the completion of the audit in terms of trails, references that the auditor can make. For example, if we said that there was unreported revenue, so you're going to reassess the taxpayer for additional revenue, there should be proper support as to how you come to that determination. So it's important very much to complete the audit and have the necessary references, trails to support the auditor's finding or determination. So we have a brief content. We have a introduction, completion review and reporting, what it entails, and then in particular, what it entails for a tax audit, and then the auditor's responsibility as it relates to completing the audit. Now, every audit is performed on a basic premise that both the auditor and management, the audit client or the taxpayer, have distinct roles and responsibility. And that is most often spelled out in the audit notification letter that is sent to the taxpayer. It is important that the auditor clearly define and differentiate the role of both parties. All right, for example, the auditor should specify in the letter which information that the taxpayer is required to provide to support the auditor work, and also how the auditor is going to evaluate those documents and what information is expected to be acquired and reviewed, as well as the timing of the audit in terms of both the coverage of the audit and how long it's going to take to conduct the audit. So in general, management has responsibility to maintain proper accounting controls. Accounting controls are those controls that will maintain the integrity of the taxpayer information, both the financial statements and the supporting documentation. So that should be clearly spelled out by the auditor that the management has responsibility to maintain proper control, and no control will also include compliance with the existing tax legislations. Then the auditor should also specify which laws or regulations apply with respect to the taxpayer. For example, if you are auditing a commercial bank, those relevant provisions of the law that apply to the operations of the central bank, the commercial bank, or the insurance sector, those should be clearly spelled out, because that is the basis of the audit. That is the predication of the audit. So the auditor is required to evaluate and report on the management, the taxpayer compliance with the tax legislations in terms of registration, filing, declaration, and as well as timely payment of taxes. All right. See somebody. Okay, no. So what is the purpose of the completion review? So it is intended to provide the auditor with a high level of confidence that the audit has been planned and performed in accordance with the professional standards and also laws and regulations that govern the tax administration with respect to tax audit. So that has to be very clear. All right. And what I said was that the purpose of completion review is to provide the auditor the assurance that the audit has been planned and performed in accordance with relevant standards and laws as it relates to tax audit in the specific jurisdiction, and also adequate and sufficient evidence have been acquired and documented to support the auditor's conclusion. So, for example, one of the things that the auditor needs to do is to make sure that each objective of the audit in terms of relevant account balances, disclosure, or even with respect to the accuracy and completeness of elements of the financial statements are being satisfied. If, for example, the auditor concludes that the revenue was understated or underreported, that conclusion should be supported by the relevant working paper. And we heard from our presenter previously that those are the key elements that constitute the content of the audit working paper. So the auditor should be able to ask himself or herself to say that, have I achieved this particular objective? For example, that do I have support to show that the revenue was understated or expenses were overstated? So that is the audit trail that should be provided by the auditor, and the completion review is basically to answer that question. Now, it also goes to say that whatever determination that the auditor makes is say in accordance with the relevant laws or regulation. Yesterday, we heard from one of our participants that said there was a tax bill that was adjusted downward from millions of dollars to a few $1,000s. And that is basically one of the issues, because if there is no proper quality review of the auditor's work, that will lead to issuing an audit report that is not correct, because either the proper review are not being done and the laws were not properly applied. So the review process helps the auditor to gain confidence that sufficient and appropriate audit evidence has been obtained and the auditor determination is in accordance with the facts, not sentiment, as we also learned yesterday from our presenter on the key principles of the audit. Because if the audit is not based on fact, then that's going to affect the reputation of the tax authority. If the taxpayer is able to successfully argue that the tax bill is incorrect and the taxpayer win a case against the tax authority, that's going to affect the reputation of the tax authority, both in a tax community and also in the courts, because sometimes you now go to the court say, oh, even you don't even know how to apply your own law or your own regulations, and that undermines the authority and the relevance of the tax authority. So again, it's by asking yourself, each element of the audit, have they been certified? Have you obtained and reviewed sufficient and appropriate evidence to support your conclusion or your determination? If you say that the taxpayer owes government, do you have sufficient record? Do you have evidence to support that, yes, indeed, the taxpayer owes government? So basically, in a completion review, like Timothy said, there's a use of checklist to check off each element, each item on the auditor's report, especially those significant findings and conclusion, so that there can be adequate document and records to constitute the evidence in support of the auditor's determination. If that is not done, then the audit will be actually compromised, and if there's a court, there's the litigation, the auditor will not be able to defend its finding, which is a serious challenge in most jurisdictions. Especially in Liberia, there have been a case where over the past, I think 4 or 5 years, the revenue administration have found it difficult to win tax cases, because most times the audit has not been done correctly, or the proper laws and regulation has not been applied, or the auditor has not gotten the support in terms of documentation analysis that will support the findings. That is a problem for tax administration, because it's going to not just waste resources, it's also going to lead to damages in the reputation of the tax authority. Now, there are key principles that govern audit documentation and that also support the completion review. So, for example, if and most times I tell auditors, don't tell me you did a particular work, show me evidence of the work. So the evidence is important to support the auditor's determination. If there is no evidence, then there is no audit. And that's plain and simple, because audit is not based on individuals' opinion. Audit, especially for a tax audit, is based on facts, is based on records, is based on analysis, is based on documentary evidence in whatever form, rating or frame, whatever that may be, to support the auditor's finding. So the number one is that if there's not a documentation, then there was no work done, there was no audit. So if the auditor said, oh, revenue was misstated, and that is not documented in the working paper, then that was not the truth. So that has to be documented. So if it is not documented, then it was never done. That's the key principle for auditors to remember, that in the audit, whenever there's an assertion by the auditor, a determination, that has to be supported. If it is not documented, then that is not the case. Now, audit documentation we learn from Temitope has also the structure of the documentation in terms of the relevant information, the name of the taxpayer, the period, the reviewer, and all those elements that constitute the working paper. Now, if it is not properly documented to be understood, then it is better that it should not even be documented, because that is going to be just a waste. It's equivalent to not being done because it is not done properly. So a proper structuring of the audit documentation to support both the review of the auditor's work as well as showing that the audit was properly done to support the auditor's conclusion. Another key principle is that if the documented work cannot support the auditor's opinion, all right, meaning if, for example, the auditor said that the taxes were not paid on time, all right, and there's no support, there's no document to support, then it is rather that the auditor has not reached that conclusion. All right, so the audit documentation should be able to support the auditor's opinion. That's relevant and very key to the tax audit, especially so it has to do with the payment of money by the taxpayer. And most sophisticated taxpayers, they will employ the best legal representation or accountant to justify their position. And another thing is that the audit documentation should enable the auditors discharge his or her duties. And there are three key duties in the audit. First, that the audit was planned and performed in accordance with relevant standards or the laws. So if there's no support on the working paper by the auditor that the work was planned and performed in accordance with the relevant standards or the provision of the law or regulation that gave rise or that govern the audit, that is a problem because it's going to lead to a poor audit, and in fact, not a representation of professional audit. Now, so in terms of tax audits, the tax auditor, so we say there are generally 4 key principles that govern completion review in an audit. And number 1 is that if it is not documented, it was never done. And that's a very key principle because, like our previous presenter said, in the content of the working paper, there are specific requirements in terms of schedules and findings, analysis that should be shown to support the auditor's opinion or the auditor's determination. And if it is documented but cannot be understood, then it is better never to have been documented. And that's very key. You know, like in the structure of the working paper, the name of the taxpayer, all right, the period, the analysis done, the result of the procedure, those has to be properly documented to be understood, even by a professional auditor with no previous experience of the audit, to come to the same conclusion as the auditor. And then if it is documented but cannot support the auditor's opinion, then it is rather never to have been documented. Again, if you state in your determination that the revenue was underreported and that there's no documentation to support the auditor's opinion, then it is rather never to have been documented. And then also the working people should be able to assist in the discharge of the auditor's responsibility, which is one, that the audit has been planned and performed in accordance with relevant standard, and two, sufficient and appropriate audit findings evidence have been obtained to support the auditor's opinion. And if there's any legal challenge to the auditor's opinion, the working people should be able to support the auditors in discharging the responsibility that yes, the audit was done and the findings are correct. Can we go to the next slide, please? Okay. So particularly in a tax audit, there are specific completion review exercises that the auditors need to do. Number one, for example, is to make sure that the tax compliant position of the taxpayer has been clearly established in terms of determining whether, for example, the taxpayer has registered the appropriate taxes, the CRT, withholding on salary and wages, withholding on independent contractors, or even commissions on sales and expenses are being actually properly registered, and the timely filing of those information to the tax authority. So as part of the completion review, the tax auditor should make sure through a proper checklist that the timing of the filing is within the time. So because in most jurisdictions, there are specific periods for filing tax return, all right? And also to check whether the return file or the declaration are accurate, the accurate declaration in terms of revenue not understated or expenses not overstated, and the relevant amount have been properly calculated using the appropriate tax basis and the tax rate. And also the auditor should check whether the payment of tax liabilities by the taxpayer has been paid in full and in a timely manner, because taxes are paid given the period to which they relate, and they have to be paid within specified time as per the tax legislation. So these 4 areas are key completion review area for every tax audit in terms of the accurate registration, timely filing, accurate reporting, and the full payment of tax liabilities. So the auditor should also certify that yes, the compliance obligation relating to this area